Good morning, my name is Toby Files, Managing Editor of Global Capital, and I'm here with Patrick Sana, Head of Macro Strategy at Swiss Re. Patrick, I'd like to start by asking you about the recent events in the Middle East. Mixed market reactions have been relatively limited so far. How would you explain this?
Well, I think it's actually quite symptomatic for similar risk events over the past couple of years. So first of all, it appears that investors don't believe that tensions will escalate further. But secondly, and importantly, investors also rely or continue to rely on central bank intervention should things go sour. So this has been a topic of the past. I think this also explains why we're not really seeing that much of a reaction. But in any case, I do think that the Middle East tensions really need to be very closely monitored because the ramification of the global for the global financial markets and the economies could be substantial.
Would you mind telling us about the ECB's framework review and what you hope to get out of it?
Yeah, absolutely. So I think that the ECB is doing a framework review is actually already really great news. The global economy is changing, and hence global policy making also needs to adapt. What I hope that the ECB, or what I hope to get out of the ECB framework review, is that the ECB takes sustainability of their policies more into account in the future. And by that, I don't only mean climate change policy, where I think they can contribute, but also where they think more holistically about the potential collateral damage of their policies, be it on financial stability, but also on economic inclusion.
Okay. In the CE region, what do you see as the biggest threats to the current generally positive economic outlook?
So the external backdrop is really important for the CEE. I think if that external backdrop becomes weaker, then that would be problematic for the CEE. But I think the key question is about how resilient the CEE economies are. And if you look at how integrated they are in terms of export concentration, in terms of supply chains, together or with the Eurozone economy, then the question of CE resilience is ultimately a question also of Eurozone resilience. And we did quite a bit of research with the London School of Economics last year on economic resilience, and our assessment is that the Eurozone economy is less resilient now than it was in 2007, and therefore this also has ramifications for CE in terms of their shock absorbing capacity.
Patrick, thank you very much.
Thank you.
Thank you.